Hey guys, what's up? This is Neo. Welcome back. Pardon my voice. I still have a cold, so I'm wearing a lot. Even though I have my heater on, I'm still feeling kind of cold and have a running nose for the whole day. Anyway, today, what is going on? Why gold and silver are going up so crazily, so as copper and then Bitcoin and other digital coins also? Now, things goes in waves. So Bitcoins go up first, and now they are on to silver and gold and other metals. And then last year we also saw a lot of AI related stocks and energy related stocks going up crazily. And why? There has been a concerted effort around the world from different type of investors and government units to corner or buy up silver and gold. Why? Because they are increasingly not confident of the future value of United States dollar, USD. Now, in 1971, President Nixon decoupled the value of fiat currency or the paper money of USD from the gold standard, meaning from that year and onward, United States can print as much money as they can, literally, without worrying about the total supply compared to how much gold is in their reserve. So let's say each gold billion is equivalent to 100 $1 bills. Then if you have 10 billions of gold, 10 times 100 is 1,000 US dollars in circulation. However, because we have trade deficits, we are increasingly owing more and more money from overseas governments, especially China, in order to continue to grow our domestic economy with enough monetary supplies. We actually also want to be able to repay what we owe foreign countries. So if we decouple the value from 1 billion equal 100 bills of $1, then let's say we want to double the amount of prints, right, of the fiat currency, which is USD. Then it doesn't matter how much gold we have, we just double the amount from 1,000 units of USD to 2,000 units. So from 1,000 paper of $1 bills, now it becomes 2,000 of the same dollar bill, right? Then if we owe China $1,000, then now we can print $1,000 and pay back China, right? And then we keep the other $1,000. That is the purpose. So as of late 2025 and early 26, Japan is the largest foreign holder of US debt, holding approximately 1.1 trillion to 1.2 trillion in US Treasury securities. Now, this investment is part of Japan's reserve management strategy to enhance or ensure safety and liquidity. Japan has held the top position for over a decade. Total holdings, according to macro data from November 2025, Japan held 1.2 trillion worth of USD bonds. Crazy. Other reports indicate holdings of 1.13 trillion in early 2026. So we don't want Japan to default. One thing. Now, Japan holding constitute a significant portion of the total foreign held US debt, which is roughly 9.5 trillion. Comparison, Japan holds more US debt than China, which held approximately 700 billion to 760 billion in late 2025 and early 2026. So Japan is ahead of China in owning a lot of US debts and bonds. role, these investments are used by Japan to manage its currency and maintain stable, safe assets. Now, what happened? People for the last 2 to 3 decades have been able to borrow in yen with zero or negative interest rates due to Japan has been having aging population for the last 3 decades, and in order to spur growth domestically, they need to provide more incentive for people to invest in Japan. So if they have negative interest rates or zero interest rate, essentially, it is free money for you to borrow, and you can borrow it and invest in Japan, right? But however, due to whatever reason, the requirement has been quite loose, and a lot of investors borrow from Japan yen and invest in US safe bonds and also other um, bond beating investments such as stocks or gold that goes up faster. Now, if Japan decides to increase interest rate, which will in turn increase the borrowing costs, then investors will be forced to sell US bonds and their investments in silver and gold in order to pay back their almost free money before, which is not free anymore if interest rates go up for borrowing yen, right? Will it be likely? Because the exports, Japan's biggest industry is its auto industry. And this auto industry of Japan has been said or criticized to be very late to the electrification of the auto industry compared to Korea and especially China and even to United States too. So Japan may lose out on this auto industry in a global scale, and which further cause more disability to the Japanese government to pay back loan to US, right?
Days when gas guzzlers ruled the world and EVs used to look something like this? Well, Japan sure do, and they would like for this to go on forever and ever and ever. But sadly, now EVs look more like this. And Japan does not like it. Actually, Japanese automakers have been staunch opponents of EVs. They've instead been promoting technologies like hydrogen fuel that's, it's cool technology when it doesn't explode. Where were we? Oh yeah, Japanese automakers suck at making EVs. Just look at Toyota, like the biggest car manufacturer in the world. They're making shit like this one, the B4ZX. I didn't even make that name up. That's the actual name. And it costs like, what, $55,000 for a range of around 400 kilometers? That's around 200 freedom miles for you all Americans. That's like the best EV they have.
Because Japan is holding so much US debt, we want Japan to be able to repay. Now, first scenario, US intervene, sell US dollar in foreign market and buy local currency, which is the yen. But that will trigger people selling US dollar in overseas. Why? Because we are trying to flood Japan with USD. Then Japan will see stronger yen towards the USD, and other countries will see it as, you are only helping Japan, but then you are making my export to you more difficult because it strengthens the yen and weaken the US dollar, right? Then someone who is selling something to United States in Thailand, let's say, will not be able to have much revenue, will have decreased revenue because of the exchange rate, because the USD is being weakened intentionally overseas. So that is a perplexity, it's a dilemma which United States may not want to have such consequences to happen. So scenario 2, United States may just not intervene the devaluation of yen. If that is the case, if the yen goes down, and in order to attract foreign countries to hold more yen, the Japanese government may be forced to increase interest rate. That really will trigger selling of gold, silver, United States investments, including United States treasuries and bonds. And we will see a sudden drop of our stocks and precious metals, silver and gold, maybe Bitcoin as well, right? So Japan holds 1.2 trillion of US debt. All right, and then a direct selling of dollar intervention is not likely in that sense. We have talked about it. There are other ways to stem the decline of the yen, which is by increasing the interest rate. Then it push up the bond yields in Japan, and then lower the bond prices. This is quite a dilemma. How will it play out? Nobody knows. But if you are trying to be on the short side for gold and silver, be careful. We have to wait for signals. It is very unlikely during these Trump administrations that the America will be helping the yen to have a stable value. It is very unlikely, very, very unlikely. The goal is to make our products greater compared to foreign products and at a more competitive pricing. So right now we are doing great. Compared to Japan, we have better AI. We have better preparations of the upcoming revolutions of quantum computing compared to Japan. We are more prepared to have a vertical integration of the auto industry when it comes to electrification compared to Japan. But still, United States is a little bit behind Korea and China, especially in electrifications of the auto industry with vertical integration. So Japan eventually will be unable to repay all the debt to United States. If right now they are spending 20% to just pay back the interest to the United States, imagine few years down the road with their aging populations, with their weakening auto industry, they will be finally facing the truth that they may not be able to repay even the interest portion of the US loans. Then it will have a ripple effect to the rest of the economies all over the world. And stock markets all over the world will react together. There will be a huge that day may come, but it's not immediately. It doesn't come immediately. So don't stand in front of this train of silver and gold, because right now people are saying since 1971 when Nixon decided to decouple dollar from the value of gold or the gold standard. People have been having increasing anxiety of holding US dollar, because if you hold too much US dollar, in future's time, let's say 10 years down the road, a cup of coffee that you are drinking today, which costs you $3 to $4, 10 years will cost you $7 to $8. Same thing, if we go back 10 years, the same cup of coffee, which is costing you now $3 to $4, 10 years ago, so only $1.50 to $2, right? Inflation, devaluations of the US dollar, so that we can pay back our loan to foreign countries with newly print currencies, US currencies. Easier for us to repay. It is engineered. Inflation is engineered. It will stay, and in order to fight devaluations of the dollar and the diminishing purchasing power of the US dollar, we have to invest wisely, invest in assets which go up in value against the dollar over time. Thank you for watching, and we will have more video about different type of investments and what kind of companies are great for our portfolios. I am Neil. Thank you for watching. Appreciate it. I have not slept so far. Thank you.